Hello, and thank you for joining us here on the Clarity Core. Today, we'll be exploring the topic new, Spot Bitcoin ETF. Explained, the easiest way to invest in crypto now. If you've ever wanted to invest in Bitcoin but felt it was too complicated or risky, this video is for you. Because something big just happened in the financial world. Something that's changing how everyday investors can finally own Bitcoin safely, easily, and without needing to touch crypto exchanges at all. It's called the Spot Bitcoin ETF. And whether you're a long-time crypto enthusiast or a complete beginner, understanding how it works could be one of the smartest financial moves you make this year. In this video, we're going to break down what a Spot Bitcoin ETF actually is, how it's different from owning Bitcoin directly, why Wall Street and Main Street are both paying attention, and whether it's truly the easiest and safest way to invest in crypto today. No hype, no jargon, just a clear, real-world explanation you can actually use. So let's start with the big question. Full disclaimer. This video is for educational and informational purposes only and is not financial, legal, or investment advice. The Clarity Core is not a registered financial advisor. Crypto investing carries high risks, including the total loss of capital. Always conduct your own research, DYOR, and consult with a licensed professional before making any investment decisions. What exactly is a Spot Bitcoin ETF? To understand what a Spot Bitcoin ETF is, we first need to understand two things: ETFs and March spot prices. An ETF, or exchange-traded fund, is a type of investment fund that trades on the stock market, just like a stock. When you buy an ETF, you're buying a share in a basket of assets. For example, the S&P 500 ETF, VOO, owns the 500 biggest companies in America. The Gold ETF, GLD, tracks the real-time price of gold. Now, a Spot Bitcoin ETF works the same way. But instead of owning gold or stocks, it owns real Bitcoin. Every share of a Spot Bitcoin ETF is backed by actual Bitcoin that's held securely by a regulated custodian, like Coinbase custody. That's why it's called a Spot ETF, because it tracks the current spot price of Bitcoin, meaning the real-time market price of Bitcoin itself, not futures contracts or derivatives. So, when you buy one share of a Spot Bitcoin ETF, you're indirectly owning a small piece of real Bitcoin, without ever needing to create a crypto wallet or worry about private keys. Why? This is such a big deal. For years, Bitcoin investors have been waiting for this moment. Traditional investors, those who prefer to buy stocks and funds through their normal brokerage accounts, had very limited access to Bitcoin. Sure, they could buy crypto through apps like Coinbase, but many didn't want to deal with the technical side, like managing wallets, handling seed phrases, or dealing with unpredictable crypto exchanges. Others were concerned about security, regulation, and volatility. That's where the Spot Bitcoin ETF changes everything. For the first time, you can now buy real Bitcoin exposure directly from your regular brokerage account, the same way you buy Apple or Tesla stock. No exchanges, no wallets, no crypto learning curve. It's Bitcoin investing made simple, secure, and regulated. That's why it's called the easiest way to invest in crypto now. A quick history: how we got here. The road to a spot. Bitcoin ETF wasn't easy. For more than a decade, the U.S. Securities and Exchange Commission, the SEC, rejected every application for a Bitcoin ETF. Why? Because they were worried about market manipulation, custody risks, and investor protection. The SEC didn't want ordinary investors to lose money due to the unregulated nature of crypto markets. But over time, things changed. Bitcoin matured. Institutional interest grew. Custody technology improved. And major players like BlackRock, Fidelity, ARK Invest, and Van Eck started pushing for approval. In January 2024, it finally happened. the SEC approved the first ever spot Bitcoin ETFs in the United States, a historic moment for both crypto and traditional finance. It was the green light that connected Wall Street to the blockchain. For the first time, Bitcoin officially entered the mainstream investment world. Spot Bitcoin ETF versus Bitcoin Futures ETF. Now, here's something important. Spot Bitcoin ETFs aren't the first Bitcoin ETFs ever created. We actually had Bitcoin Futures ETFs before, like the ProShares Bitcoin Strategy ETF BITO, launched in 2021. So what's the difference? A futures ETF doesn't hold actual Bitcoin. Instead, it holds contracts that bet on Bitcoin's future price. That means its performance doesn't always match Bitcoin's real price, because futures contracts can expire, roll over, and have fees that distort returns. A spot ETF, on the other hand, holds real Bitcoin directly. It tracks the real-time market price without those complications. Think of it like this. Futures ETF equals synthetic exposure. Spot ETF equals real exposure. That's why investors and institutions prefer spot ETFs. They're cleaner, simpler, and more accurate. How spot Bitcoin ETFs actually work. Let's take a look under the hood. When you buy a share of a spot Bitcoin ETF through your brokerage, here's what happens. The ETF provider, like BlackRock or Fidelity, receives your investment. They use that money to buy real Bitcoin from regulated exchanges. That Bitcoin is stored securely by a trusted custodian, usually a company like Coinbase Custody. The ETF's share price then moves up or down based on Bitcoin's real market price. In other words, the ETF is a wrapper that holds Bitcoin. You own a piece of the wrapper, not the coins directly. You can buy it in the same account as your other investments, and you can even hold it in your retirement accounts, like an IRA or 401k. That's a game changer. Because before, if you wanted to own Bitcoin in your retirement fund, you had to use complicated self-directed IRA services. Now, it's as easy as buying an ETF. Who's offering spot Bitcoin ETFs? As of 2025, there are several major spot Bitcoin ETFs trading in the U.S., including iShares, Bitcoin Trust, IBIT, by BlackRock Fidelity Wise, Origin Bitcoin Fund, FBTC, ARK21, Shares Bitcoin ETF, ARKB, VanEck, Bitcoin Trust, HODL, Bitwise Bitcoin ETF, BITB, Invesco Galaxy Bitcoin ETF, BTCO. Together, these funds manage billions of dollars in assets, and that number is growing every month. In fact, within the first few weeks after approval, spot Bitcoin ETFs saw record inflows from both retail investors and major institutions. This showed that there was enormous pent-up demand for Bitcoin, from people who were waiting for a safe, regulated entry point. Why spot Bitcoin ETFs matter. Let's talk about why this matters, not just for investors, but for the entire crypto ecosystem. 1. Easier access for everyone. Before, buying Bitcoin required using crypto exchanges, setting up wallets, transferring funds, and dealing with complex security. Now, anyone with a brokerage account can invest with a few clicks. 2. Institutional legitimacy. When companies like BlackRock and Fidelity enter crypto, it sends a signal. Bitcoin is no longer fringe. It's part of mainstream finance. 3. Price stability and liquidity. Spot ETFs attract massive institutional capital, pension funds, asset managers, and corporations, which increases liquidity and can stabilize prices over time. 4. Regulation and trust. ETFs operate under SEC oversight. That adds transparency and security for investors who might otherwise distrust crypto exchanges. 5. Broader adoption. Easier access plus trust equals more adoption. The Spot Bitcoin ETF is a bridge, connecting the traditional financial system with the digital future. Pros and cons of Spot Bitcoin ETFs. Let's look at both sides, because no investment is perfect. Pros. Easy to buy and sell through your normal brokerage. No need for crypto wallets or private keys. Regulated and transparent. Eligible for retirement accounts. Tracks Bitcoin's real price directly. Cons. You don't actually own or control the Bitcoin. No private keys, management fees, usually 0.2%, 0.4%. You can't transfer it or spend it like crypto. Dependent on the fund's custodians and regulators. So the Spot Bitcoin ETF is great for investors who want exposure to Bitcoin's price, but don't want to deal with the technical or security side of crypto ownership. If you're a crypto purist who believes in not your keys, not your coins, you'll probably still prefer holding Bitcoin directly. But if you just want to invest in Bitcoin as part of your portfolio, like you'd invest in gold, stocks, or real estate, then a Spot ETF might be perfect. How to invest in a Spot Bitcoin ETF. Investing in a Spot Bitcoin ETF is surprisingly simple. Step 1. Log into your normal brokerage account, like Fidelity, Charles Schwab, Robinhood, or E-Trade. Step 2. Search for the ETF ticker. For example, IBIT, BlackRock's ETF, or FBTC, Fidelity's ETF. Step 3. Decide how much you want to invest and buy it just like any stock. That's it. You now have exposure to real Bitcoin, but through a regulated, familiar investment vehicle. No exchanges, no crypto wallets, no extra steps. It's that easy. The bigger picture. Why Bitcoin ETFs could be transformational. This isn't just about convenience. The approval of Spot Bitcoin ETFs marks a turning point in financial history. It signals that Bitcoin has officially crossed over from being an experimental asset to a recognized store of value. Think about this. When gold ETFs were approved in the early 2000s, gold prices surged dramatically in the years that followed, because it became easier for everyone to invest in gold without owning physical bars. The same thing could happen with Bitcoin. Spot Bitcoin ETFs open the floodgates for massive new demand from institutions, retirement funds, and investors who previously stayed on the sidelines. This could lead to a new era of institutional Bitcoin adoption, where Bitcoin isn't just seen as digital gold, but as a core portfolio asset. How Spot Bitcoin ETFs could affect Bitcoin's price. Now let's talk numbers. Historically, every time access to Bitcoin becomes easier, prices trend upward. Not immediately, but over time. When PayPal introduced crypto buying in 2020, Bitcoin's price tripled within a year. When Tesla announced Bitcoin purchases in 2021, prices hit new highs. Now that BlackRock and other giants are buying real Bitcoin through their ETFs, that's hundreds of millions, even billions of dollars in buying pressure. And here's the key. Every new share of a Spot Bitcoin ETF must be backed by real Bitcoin. That means every time investors buy ETF shares, the fund has to go out and buy actual Bitcoin on the market. More demand plus limited supply equals upward pressure on price. So while short-term volatility will always exist, Spot ETFs could create a long-term tailwind for Bitcoin's price as adoption grows. Common questions about Spot Bitcoin ETFs. 1. Can I lose money with a Bitcoin ETF? Yes. Just like any investment tied to Bitcoin's price. If Bitcoin's value drops, your ETF shares will drop too. 2. Do I actually own Bitcoin? Technically, no. You own shares that represent Bitcoin held by the ETF provider. You can't withdraw or spend those coins. 3. Is it safer than buying Bitcoin directly? For most investors, yes. Spot ETFs are regulated, insured, and stored with institutional-grade security. 4. Will there be Ethereum or other crypto ETFs next? Probably yes. After the success of Bitcoin ETFs, Ethereum Spot ETFs are already being discussed and may arrive soon. The future of Bitcoin investing. The approval of Spot Bitcoin ETFs doesn't just make crypto investing easier. It redefines what investing in Bitcoin means. Because now, Bitcoin has officially entered the same league as gold, oil, and the stock market itself. It's no longer just a digital experiment, it's an asset class. We're entering a new era where crypto meets Wall Street. And it's only the beginning. Financial advisors can now legally recommend Bitcoin exposure through ETFs. Pension funds can allocate small percentages safely, and everyday investors can diversify without fear of crypto exchange hacks or scams. That's the power of the Spot Bitcoin ETF. It makes Bitcoin accessible to everyone, everywhere, without friction. Should you invest now? Let's be honest. Investing always carries risk. Bitcoin is still volatile. Prices can swing wildly in days or even hours. But long-term investors see Bitcoin as more than a speculative bet. They see it as a hedge against inflation, a digital form of gold and a store of value for the 21st century. If that's your mindset, a Spot Bitcoin ETF is one of the safest, most convenient ways to gain exposure. You can start small, invest what you can afford to hold long-term, and treat it as part of your diversified portfolio. And remember, this isn't financial advice, it's education. Always do your own research or consult a financial advisor before investing. Final thoughts. The Spot Bitcoin ETF isn't just another financial product, it's a bridge between the old world of traditional finance and the new world of decentralized technology. It makes Bitcoin simple, it makes it regulated, and it opens the door for millions of new investors to participate in the digital revolution, without the confusion or technical barriers of the past. So whether you're a skeptic, a believer, or just curious, one thing's for sure. The Spot Bitcoin ETF is changing how the world invests in crypto forever. And it might just be the easiest and smartest way to invest in Bitcoin right now. If you find this video interesting, please leave a comment, let us know, like, subscribe, Chanel, and share the video with everyone.